Where's the computer, I guess? Funny. It's about
All right, episode 2 finally up.
finally, after a short hiatus. Take the few weeks off of the clashing timetables and stuff like that.
Yeah, get sharp, get funded.
Yeah,
Now we're back.
A lot's happened though in the last 2 weeks. Was it 2 weeks or is it 3 weeks?
I think it's about 3 weeks since the first video.
Yeah, so definitely a lot has happened. We're here with our first guest, Bankaholic.
Man, the myth, the legend.
I appreciate it.
Thanks for coming on, man.
For sure.
So let's explain a bit about yourself, where you come from, what got you into trading, stuff like that. Just get started.
Yeah, for sure. I started trading probably. Well, I had an interest in it at a young age, like coming into high school, and I was just dabbling in like stocks and stuff. Nothing really too serious. And then I think, kind of like a lot of people, a lot of similar stories. Like during the pandemic, I found ICT, and that's when I just started going down the rabbit hole and like getting a lot more interested and serious about like trading and like what it could do financially and just having fun with it. And up until January, I was just on YouTube, just trying to learn myself with the free content. And then I joined mentorship, kind of like I think all of us joined in 2021, or except for Stikish. But once I joined mentorship, that's when I really started to see profitability and consistency around like the third month. And up until then, till now, I've just been getting better and just working on my system and trying to get funded. And that's pretty much it.
Sweet. So, what kind of? I already know what such type of style you trade as well. Like, but obviously you don't have to go too deep into detail. But like, just give us like the kind of time frames you trade on. Sort of like the
sure.
little like a light rundown on it, nothing too in depth.
Yeah, I usually trade like intraday scalping, like most of us. I usually try to stay on the 5 minute time frame. I used to be on the 1 minute a lot, but just with what I've been working on recently and what I found consistency with, I usually execute on the 5 minute and just use like the daily as my point of bias. If that makes sense.
Yeah.
Yeah, most of us. I think that's the style for like most of us. We'll probably go as high as a weekly, just for order flow to confirm your bias, and then once it's go time and execution time, we're usually on like a 5 minute, 15 minute, and then 1 minute if you want that precision. But I think that's generally what we do. And you're strictly forex peers, right?
Yeah, for me, I strictly traded EU and GU up until just recently, honestly, just because I was trying to learn price action and learn how everything worked. And those are the two like most common pairs that I've seen people, or specifically ICT learning or students trading. Sorry, and just more recently, I've added like pretty much all 7 majors, and that's pretty much what I'm sticking with for now.
So you trade USD CHF?
Yeah, I do. When the time is right. You see me trade.
That's the one thing I'm not.
I sent you that entry the other day. Remember?
Yeah. USD CHF wicks around a lot, like CHF JPY. So because my stops are usually very tight. What I found is with CHF pairs, even if you're correct, if you're aggressive about managing risk and you move your stops, I'm not going to say early, but just move your stops closer to entry, there's a very, like about 70% chance that it'll probably come back and tag you on and move. So for my peace of mind, I just leave them alone.
Yeah, I've just found using intermarket analysis recently, I've been trying to integrate all the pairs just when the signals are there and not really try to exclude any. But that's kind of something new I've been trying out. But my main focus is usually on EU unless there's something else, like some type of news catalyst or something that would draw me to a different market.
Yeah.
Yeah.
I think that's something most traders don't do, because you want to be a professional. So you think that it's best to stick to one pair. But then there are days when, your favorite pair doesn't give you a setup. What do? Do you force it? Do you sit on your hands? Do you look at another? Stuff like that.
I think that's kind of all down to the personality of the trader as well, though.
I was going to add to that too. Sorry, you go ahead.
No, go ahead.
I was just going to say, like, that's one of the biggest things that I've learned most recently. Like, once you kind of master all the concepts and you figure out how things should work, it's all about like selection, like the right day, the right market, the right time, the right session. So I feel like what Stakish was saying was like really important too. Like how you could trade one pair for a week and then there could be one day where it's just not the right market to be in. And that's kind of like the more advanced like lessons you learn. Like like a year plus into trading, I would say.
Yeah, like that's kind of the point I was going to touch on there as well. Like if it comes to like for the likes of like, say for example, most traders now, like people that follow ICT, maybe not everyone, but like I'll say like 60-70% of them do trade euro and like fiber and cable. So obviously you're using euro GBP for your intermarket analysis. So that will help you distinguish from day to day which one's going to be more likely to move, which one's high resistance, which one is low resistance. So I find like that comes with the selection process of finding your trade. Like if you want to only trade EU for a week, but then you see one of the days that like the Euro GBP is more suited for a GBP USD move, then it will going to give you the indication of which one to trade.
You're right. And there's a lot of different ways you can do intermarket analysis too. And I feel like each one just comes to the same conclusion. Like there's a really cool parallel that I've been kind of noticing the past couple of months between like looking at the crosses and then just looking at divergence between the dollar and whatever pair you're looking at.
Yeah.
So it's just kind of cool. It kind of reflects all of ICT's concepts, really, like how you can use different methods, different key price levels that he outlines to come to the same conclusion with a bias. And I think me and Sakish actually did something similar last night with that AUD USD trade.
Yeah, for sure.
Yeah.
That watching that case study of yours just shows me how there's a whole lot of us learning from ICT. There's a whole lot of us trying to put ICT stuff together. But eventually, once you find your model and it's consistent, it might not necessarily be like the same as someone else. But what I've found is that we still get the same trades, because that AU trade that you took, your reasons for entering it was completely different from mine. But it was the same trade that we broke down. Me, Enda, and Suring, that last AUD trade that we're looking at for Friday. Yeah, he did a case study on it, and his reasons for entering were completely different, but still ended up with the same trade.
Yeah, that's kind of the thing I like about it as well. Like so, for example, like we have a lot of people, like the 33 of us in the lab trade all the same ICT concepts. Kind of like no one trades the same, like word for word, really. But like we all have a good understanding of what they are. But then at the same time, every single person has a different outcome, but the same trades. Do you know what I mean? Like a different way of laying it up. It's kind of like everyone's unique. Like it's kind of like a signature, so to speak, when you put it on your charts.
All right.
Yeah, definitely. I think it all comes down to the rule set, and that's something that Stakish just helped me with a lot. Just
for sure.
Like realizing that each individual day is kind of just like a different set of probabilities, and whoever has the best like rule set to either stay in or stay out mostly is going to be just going to have the highest strike rate, or at least be in the highest probability conditions to use the concepts.
Yeah, exactly.
Right. Because I've always tried to keep the idea in my mind that it really doesn't need. You don't need any kind of analysis to take a trade. You don't need to know ICT to buy or sell any market time. But before you go to the chart, I mean, what's your thought process? What are you thinking about before you enter the trade? You know, when you're in the trade, what are you thinking about? Those are the small rules that distinguish us and ultimately, you know, what leads us to profitability and consistency.
You're absolutely right.
Yeah, I mean, have you ever thought about how fundamental traders just find a move based on fundamentals, and we, you know, we're studying higher time frame, lower time frame, looking at technicals, and then we both end up with the same trade. So at the end of the day, you know, it's your preparation before you go to the chart. Most persons, or I guess newer traders, you know, when you find out that up candles mean bullish and down candles mean bearish, you see an up candle and you want to buy. Well then, I mean, for us, a lot of times we're looking at where does this up candle trade to before we enter. And I mean, like ICT says, if you want to get entries that are like wick precision, you're going to be entering way before the candle closes. Well, you know, at the time, some persons are waiting for that candle to form one of those candle patterns. And I mean, that's not to say I don't trade candle patterns. It's just that there are rules for everything. You're trading a pattern like stop one breaking market structure and RTO. I mean, we wait for those candles to close, but when the RTO is forming, that's a different thing. Once there's a stop on the breaking market structure, I don't need the RTO candle to close. I'm just getting my risk and enter.
Yeah, like that's what I kind of feel like differentiates all the kind of styles of trading from each other. It's all about the rule set and confirmation bias, like the confirmation that's required for you to enter trades and the rule set. Like as you say, like a retail trader might wait for a break and a retest of a trend line, whereas one of us might be at the exact same point of where it is retesting trend line. We might be buying as the candle is forming down, whereas they'd buy 2 candles from the trend line after the rejection.
Yeah.
But like it goes to show, like you can be profitable with any style of trading. It's just it's more so about the rule set that you bring to the table while you're just like deciphering your way through the markets.
For sure.
Yeah, I think a good example of that too is how I think in the past, maybe since the beginning of January, I think you strictly changed your model to just breakers, or maybe it was like March. And it's funny. It's just funny. Yeah, it's just funny how you and Mr. Kish oftentimes, like most weeks, probably have like 1 or 2, maybe 3 of the same entries on gold or whatever pairs you trade the most. And it's just cool how your rules can overlap, and it's only because you're just using the higher time frame analysis, a simple breaker, just like one price level or one concept, and how that can overlap with so many different setups. And
see, it's kind of
no, you go ahead.
Yeah, it's kind of like, so for a breaker to be used for me anyway, it has to come with a context. Like there's no, it's not just like, oh, okay, there's a higher, a low, a higher high. Okay, use this breaker. Like it depends on what happens below that. Like if you're looking for, say, a bearish breaker, if you take sell side liquidity and start rallying towards this breaker, and there's no FEG or something, you know, for that kind of like market, it's high probability that's not going to work.
Yeah.
You know what I mean? So you need to have a clear distinguished targets, you need draws and liquidity, you need context alongside intermarket analysis to kind of give you the rundown or idea that's going to be low resistance.
Yeah, I was just trying to make the point that you can use like one main filter, and he used a whole different set of filters with like range projections, all that, and you have a different set of rules, but you can come to the same trades most of the time. And it just kind of shows you the absoluteness of like the markets or the overall algorithm rules, but how we can emulate them using ICT's concepts.
Yeah, of course.
And
True. I mean, if you think about it, most traders think about it. you want to be consistent, but what does consistency mean to you? Consistency doesn't mean that you're making a profit every time you take a trade, because ultimately you will lose a trade. Consistency comes from having a clear definition of what you want to see before you enter. What's your entry confirmation? What's your trade management conditions? Like, those have to be clear, or you're gonna end up in the same place like most retail traders, where you win sometimes and then you lose sometimes, and then you really can't tell why you're losing, and then there's no growth from that.
So what do you guys think the biggest eye-opening or learning experience you had was that led you to like overcome something that you'll never have to go back to, or like change a perspective?
And they want to go first?
Yeah, there's a few things like we were speaking about earlier on as well. Like, it's sort of like the intricacies. Like, I made a post into my Telegram channel there not too long ago saying, like, if a new trader approached me and they said, like, they had no concept of anything at them, like they literally just opened their first chart and they said, where do I start? I say I honestly wouldn't be able to tell you. But it's not for a fact of like I just can't explain, because like I understand what I'm talking about. It's just the fact of like there's so many tiny little things, like, like the difference between, it might be the difference between high resistance, low resistance. Like, trying to explain that to somebody who doesn't even know what a candle is, like. But for me anyway, the kind of the thing that's changed mainly over the past year for me, big time, has been it's definitely been like the rules. You know what I mean? Like, what, like, okay, this has to happen before I can even consider opening a chart and thinking this trade like will work. Or like, it's just because like trying to work on discipline mainly, like, because candle patterns, they aren't it, like, do you know what I mean? It's all about context, it's all about intermarket analysis, it's about your psychology when approaching trades, why you take each trade, and you need to have a clear set defined rule set before you can actually think about taking a trade. But I think that's one of the biggest things over the past year, that's kind of made the biggest difference to me.
Well, for me, starting out, trading for me was all about patterns. So I had very little to no patience at all. I just wanted to see the market moving and I wanted to be in. So even if you would have an analysis and it says that you're going to buy when price drops down here, but then you open your chart and price is moving already, and FOMO starts to kick in. So you're taking that trade. And then, I mean, most times what I find with FOMO trades, it gives you an opportunity to get out, but because you're holding on, it eventually turns into a loss. So my biggest hurdle was overcoming, how do I determine when I can hold a trade for an extended period versus when to just scalp and go? And I think my paradigm shift came from that market valuation video. When he started learning about FEGs, and it started to click that markets don't move unless there's some kind of valuation. Because if you forget about Forex for a second, you think about stocks. Persons only invest in a company that they think it has a potential to grow, and then you naturally start shorting your stocks if you think that the market is devaluing. So it's all about valuation. If entry my entry at all. So now I have that peace of mind that I'll wait for my entries, and it will miss me because I'm gonna demand that kind of precision. But in the past, man, draw down. Like, I've ever like trading a small account and your margin drops below 50, and then the entire numbers get red, and you're just watching and like, what the hell is going on? Like, you don't understand how, like a trend line is not working or something is not working. So just journaling my losses, and I started to identify that most of my losses are because I'm not patient enough to wait for my entries. So that's when I started building in rules to don't go in the market now, just wait. And then he started seeing stuff. He started seeing how persons get tricked into entering early and then they get stopped out. And probably Bankaholic might remember when I said that I'm no longer interested in being a trader. I'm trying to be the person that liquidates traders. So I'll look at the market and I'll see an entry and I'm like, all right, somebody's going to enter here and put their stop here. I'm going to buy their stops. Or I'm going to short where they're putting their stops. And then scalping just became so much easier. So much easier. So that was my biggest paradigm shift.
Yeah, the patience really does play a big role in it as well, doesn't it?
Yeah,
it does.
Crazy.
So how about you, Bankaholic? What did you think?
Yeah, I think it was pretty similar to Stikish's journey, but I think kind of from the start, I've always been kind of like I've always had kind of like OCD with my model, and I've wanted it to always be perfect, which is kind of like a good and a bad thing because it's not going to be perfect. But I would always try to force like everything I had in my model each day into whatever I could find, and that was like my biggest flaw for the first like 6 to 8 months. And I think like you guys both know, like I would be coming up with new ideas or try to find like unicorns in price action or just like crazy ideas that would somehow bring me to 100% profitability. I think the biggest paradigm shift that I had was just realizing that it wasn't really one or two concepts applied at a very high level that would bring me to some sort of consistency, but it was a culmination of all of them together that really finds like the bread and butter days to trade or just like weeds out the noise in price action. And I think also just intermarket analysis was a really big turning point for me, is realizing that some markets are poised to go higher or lower just based on the central bank manipulation or whatever terms you want to use. But yeah, so it's kind of similar, but just more the fact that I need to use everything that I'm learning to build some sort of like high probability filter, if that makes sense, instead of trying to be precise and skilled in the market every day, trying to find 20 pips just out of nothing, if that makes sense.
Yeah, so if we break it down, what's kind of the weekly goals that you set for yourself, and what kind of like the targets for profit, or if you set any, and how do you find a way to actually reach these targets every week?
Should I go first?
Yeah,
sure.
Okay. Well, for me, I found that through the past like 4 or 5 months of profitability, I've had sort of low expectations just because I've been trying out different models. So I try to go for like 3-4% a week. And yeah, just my trading frequency has gone down a lot ever since January as well. So that's what I've kind of found consistency with, which obviously isn't the end all. But yeah.
and you kind of trade like an OSOC model, don't you? Do you rely on the news a lot for the trades, or is it simply just like when you reach a higher time frame PDRA, it kind of lines up your model for you?
Well, the most consistent like high probability filter, quote unquote, that I've stuck with has been the higher time frame PD rate. So that's mostly what keeps my trading consistency at like 2 to 3 a week. And ever since then, I've just been kind of like compiling different concepts that I feel like will help me a lot. And yeah, recently that's been high probability news a lot, and certain daily profiles and stuff. I'm not sure how much I can get into, obviously.
Yeah, of course.
But yeah, just mostly just like looking at the higher time frame overall, and that kind of just weeds out my little intraday trades I would take.
Yeah,
but
exactly.
Everyone's different as well. That's just how I like to do things.
And so approaching a higher time frame PDRA, do you refine down to a lower time frame, or is it simply just from the higher time frame using a wide stop and just kind of run from there, like managing the trade from there?
No. We gotta go lower time frame.
Yeah.
But yeah, you know that. But no, it's it can vary. Like when you first start out, I feel like that would look like the obvious way to trade, but
Yeah, of
obviously you
course.
know that there's a lot of variability with the higher time frame PD rates based on like how big the order block could be, etc. So
Yeah,
I mostly like what I found to be the most consistent. Obviously, I've changed things up, but just has been like looking at intraday profiles within this higher time frame idea. So if I want to see like, for example, like a daily order block um, active in yeah, London session and New York session, and for me personally, just New York session to see some volatility or some reaction from that level, and then that's when the intraday rules apply, which can get complex with however you like to trade.
of course, of course. Like, what would be the lowest time frame then you were finding down to 5 minute, 15 minute?
Yeah, 5 minute 15 for execution. I used to do the 1 minute, but I've just found the majority of the
Yeah.
setup looking at always have some sort of entry on the five.
Yeah, I find like depending on what kind of pip haul you're looking for from the trade, like if you're looking for a large swing, even if it is a higher time frame PD rate,
Mm-hmm.
like trying to catch a top or a bottom from a 1 minute is very dangerous. Like you can find yourself getting stopped out a lot
Mm-hmm.
doing that.
Yeah,
So it
it's just
definitely
I
would
feel
be.
like yeah, the odds even themselves out. I think, in my opinion, at least when you're looking at setups like that, like you can go for a lower stop loss, but you're gonna decrease your probability if your stop loss doesn't include when the trade should end, if that makes
Yeah,
sense.
of course.
But obviously, there's people, there's outliers, like
Yeah, of
our
course.
friend. Yeah.
For me, my weekly targets are always, well, I'm an intraday trader and I don't have a problem trading every single day um if my rules are there. So I have a rules for London, rules for New York, rules for Asian. So at 10 pips in any session, I can get 1%. So if I'm looking at a possible swing in London, it has to be more than 10 pips. If I'm going to trade London, I'm looking for anywhere between a 15 to 20 pip range that I can scalp, and I'm looking for 1%. So that's my risk on that. And I'm risking like 0.5% minimum. So it's like minimum a 2 to 1. If I get precise, then the stops can be smaller. But the main gist is to try to get a swing that can give you 1%, and then you just manage the position size. For me, so I'll get 1% here, and then that might be it for the day. But if like another session sets up and gives me my rules, and I'll take that. If I'm profitable in 2 sessions, then the third session I'm decreasing my lot size because we're not trying to give it back. Not trying to give it back at all.
Of course. And do you run over this the London modeling on your YouTube as well, or is it just the New York model so far?
Um, the New York model, I think I only shared the London model. No, I don't think. Yeah, I haven't. That's
Yeah,
still in the books.
yeah. So you haven't even thought about it yet. It's just New York for now.
Hmm. Yo,
But
I got
there's
a
a lot of it.
question.
Go ahead.
Oh no, were you gonna say something?
Oh, no, go ahead. Go ahead.
I was just gonna ask if you guys think you'd be profitable if you only had the access to YouTube content, like personally, not as like a general thing.
Um, Profitable and consistent. I'm not sure. I could be profitable if you're trading like OTE alone, but
Mm-hmm.
I don't think I would have discovered the small details that made me really refine, OTE, like type 1 and type 2, if I didn't
Mm-hmm.
understand valuation. And I learned valuation through mentorship. So um if I only had YouTube content, I probably wouldn't be a scalper. I'd probably be like a intraday, try to get the high of the day, low of the day, and then hold it. But
Mm-hmm.
I guess with what I know, it changed my personality and what I expect from the charts. So if you know you can, 10 pips a day is easy. So if you know you can find a 10 pip trade, then you condition your mind to just relax and just wait for a nice swing to form, and then you go for your 10 pips. But with OTE, you're generally looking for a larger move, and that patience I don't have. I don't have that. I don't like the idea of the market giving me a setup, then it's running, and I'm hoping for more. Whenever I start feeling like I'm hoping in a trade, I feel like I just start to feel like something's going to go wrong. I feel like I'm no longer following my rules because, hope is not a strategy. So if my rules say enter here and the market is moving 10, 15, 20 pips, I really don't think I should be in that trade and hoping for more. It doesn't matter if my analysis says this is going to be a 100 pip trade. I just want to be able to position my trades properly so that once a trade gets to 20 pips, I can take off 1% and then break even and then let the rest happen. That gives me peace of mind, knowing that, I didn't get this and then give it back, and then I'm trying to chase it to make up for what I didn't get. I don't like that.
What about you,
Sure. I'm kind of on the fence about this one because at the same time, like Kish said, I definitely would be more likely to be an OTE trader. But there's also, I disagree with the point that he said that OTE is kind of like a longer haul for trades, because when I was going through my scalping kind of like training, as I call it, when I first started scalping, I was using the concept of premium and discount using OTE within fractals. So for anyone who doesn't know what that means, like you're taking a swing, say a 10 pip swing from an order block, and then when it hits 10 pips, it might pull back in to, like if the market is trending, it will pull back to OTE of that 10 pip swing. Which is, I've seen there's a video on ICT's YouTube channel about it. It's something, it's like it's called scalping. It has scalping in the name, but it's like OTE scalping session or something like that. But it's only like 10-15 minutes, but it has something included in it about this. Like it's kind of like you can use OTE fractally, or you can apply it to like a general higher time frame, but it can like bias maybe like 15-minute, 30-minute executions, and that will give you like a maybe 50 pips or so on a good New York day. But yeah, like there's a lot of intricacies that I've figured out through mentorship that kind of overall expanded my understanding of trading. But like I don't think I would have found it without like really looking for it, if you understand. Like people kind of like, some people join mentorship and they still don't have a clue, and they're in charter and they're 2 years, 3 years into it. But like I think it's all about how hard you look through the information that's provided to you. So like the same can be said about YouTube as well. Like his YouTube concepts, he intentionally drags things out, and he might not have one video super highlighted, and it might have the least amount of views on his channel. It's probably the one with the most sauce in it, like. Because like we all know with ICT, it's really like a game of hide and seek with the good stuff. Like you have to go searching if you want to find some gems. Like
yeah. I think that's one thing about his teaching style that forces you to do work on your own. He'll intentionally drop a hint that says, this works at this time only. But then you don't hear it because you just focus on the pattern on the chart that you're looking at. But then maybe in your second watch or your third watch or your fourth watch, if you keep cycling through, you're like, wait, did he just say that? And then you pause the video and then you load up a chart and like, wait, is this a thing? And then you start backtesting and you realize that all these times, if you just knew this one little bit of extra information, or you paid attention to this, like order blocks. Everybody, wants to buy an order block, sell an order block. But when you realize that order blocks are formed, at certain areas within the range, those are the most probable order blocks, then everything changes. You can start seeing when persons are going to enter an order block and then get taken out, and then you enter after they get taken out. Right?
Exactly.
Yeah, I agree. I think the biggest thing that is missing from the YouTube content is exactly that, just the clarity of how to use the concepts. And I think YouTube kind of entices you to want to trade more a lot, whereas mentorship kind of teaches you that the majority of the days you're going to see are not suited for trading unless you're looking at the right markets. And I think that's something that we've had the luxury of learning. But at the end of the day, I think it's just a matter of like the perspective you get from mentorship that kind of trumps all the conceptual value, if that makes sense. Like you kind of just see things how they are. You see how concepts should blend, and I think knowing what I know in mentorship, if you erased all of the content, I think I would be able to be profitable with the YouTube content, if that makes sense. If I just knew how
Yeah,
to use, how to apply.
yeah, of course.
Whereas if yeah, does that make sense? Would you guys
Yeah,
agree?
yeah, absolutely.
Yeah.
Because
Yeah, like
it's just like the way that you use like I don't know how to say P order blocks. The way you use order blocks, the way you use FEGs, all these things are just kind of you just kind of get a different perspective on it from mentorship, and it's not really the content that is giving you the most value. It's just his ideology behind it.
yeah, I feel like the idea of when to use order blocks, this all falls under the category of rule basis of what we were talking about earlier. Like, so like true, like he only gives you the name of the concept, where to find it, and when it's likely to occur. He doesn't tell you how to use it or when to trade it and when not to trade it. But I
Mhm.
feel that when you dig in, you back test a lot, you'll figure it out yourself. That's kind of what he's trying to do. Like he's not trying to spoon feed you. He's just trying to say, okay, this is how it works. Here it is.
Mhm.
Here's an example. Now go figure it out. Do you know what I mean?
Yeah.
Yeah.
And
Because I
I
feel
think
like
that what
there's
it
only
does,
so much. Sorry, there's only so much that he could that he can give you before like you can't sit down and tell somebody why you understand that this works. They need to
Mhm.
figure it out themselves and see it. Like we're saying, if you learn a new concept, you have to go and back test it so you can understand it, because like it's kind of like the thing, like you don't learn anything that you see, you learn by doing, you know.
yeah.
Mhm.
And I think that's one of the reasons why most of his videos that have the most sauce on YouTube are very long.
Yeah,
Mhm.
Like
definitely.
I think he intentionally puts the sauce like 30 minutes in. And
Yeah,
then, some persons might watch the start of the video and then the end and look for stuff. Like the purge and revert video on YouTube has a
oh.
whole lot of sauce that you will miss it if you don't pay attention. That video has a whole lot of stuff in there, and it's got definition that you can use to build clear rules. And
Yeah,
yeah, so
I
that I
remember.
mean,
I remember when you uploaded that video, I was like, "Whoa!" Like that was kind of when I
yeah,
was. That's kind of when I was starting to get into ICT, and I had just started watching like through the YouTube stuff, and like the mentorship was coming up, and then he uploaded that video. It was like September-ish, and I was like, "Whoa, here we go!" Like,
well, I mean, there's still YouTube videos that I've never gone through, even the 1440 video. I've
yeah, I
never
was
watched it
just about
until
to
this
say that as
weekend.
well.
Yeah, because I was against the idea that everybody was doing it this way and they're still not getting it, and then they're sharing that you should do it this way too. I'm like, what? If it works, then it should be working for you. Why are you telling me that it should work for me, but it's not working for you?
Mhm.
So I don't watch all the videos. I focus on videos that have specific ideas that I'm
Yeah,
studying. So if I'm studying order blocks this weekend, I'm watching all the videos on order blocks, nothing else. I don't care about FEGs, nothing, just order blocks straight. And then
Mhm.
I move on to the next topic, and then eventually they just come together. Because if you understand an order block and you understand an FEG, then you say, oh, that's why this one works. Because you can't fake that experience. You can't fake that chart time that you put in on your own.
yeah,
Mhm. I would say this too. If I was an ICT YouTube student and I had to figure out a way to be profitable, I think the biggest thing I've learned just from seeing traders like Josh, everyone in Nutlab, obviously, um, and just the way that they go about things. I think the biggest thing to learn is that trading is not some sort of skill that the better you get, the more you can trade, and eventually you just know what's going to happen. And I think that's one of the big misconceptions about ICT's YouTube content that maybe is on purpose, but it kind of just shows you, like, when you see those videos of him going in a daily range and just taking like 8 trades at a time, it kind of builds this perception in your mind that this is what I need to get to. I need to be able to figure out every single market every single day, and then eventually get to that point. But the thing with profitable traders is that their skills are entirely made up just to keep them out and just to let them know when the best time to trade is. And so that's one thing I would take away just from this whole experience.
Yeah, of course. Like this is one thing I always say to people as well. Like, I like me as a trader, I don't try to catch tops or bottoms. I don't care about catching reversals. Like I used to when I first started, because I thought it was like, oh, that's something you could, send pictures into your chat or put them on Instagram and get clout over or whatever. Like it was just me when my trading was in its infancy. I was just, you're kind of looking for an identity within the trading community. But like now I don't really care because I understand what I'm looking for. But like when it comes to using breakers, I'm not looking to take the whole range. Like if the weekly range is 80 pips and the breaker, from the breaker to the low of the week to where the liquidity is, that might be 50 pips. Like I'm happy with that. Do you know what I mean? That's you don't need to catch, because the breaker might give you the idea that, okay, you've liquidated the highs, now we're going to run lower, and that gives you one, reaction point, and then 2, it also gives you an entry. 3, if you know what the draw is, you have your draw on liquidity, so you have your targets, and then that's the only thing you have to do is wait for the breaker or set a limit, and then you can capture 60% of the weekly range. And like that's safe. That's super safe. Like that's what we talk about when we say low hanging fruit. Like it's like you don't need to catch this super high top wick and get in with no pips drawdown. Like who cares? Like if you wait for the reaction, get a strong push in one direction, then a retracement into the level you want to enter at, then consolidation below your entry point. You have consolidation, you have a little stop hunt, and then consolidation goes into expansion. So that's all you need to really know. Like it's kind of the things like that I learned over the space of time trading that's just made me so much better, because you don't need to buy 10 pip range and sell another 10 pip range. Well, unless you're stickish, but like that's different level.
Yeah. There's different ways of doing things, but I feel like, yeah, you're right, because once you figure out what we know, then you can it's all fractal. You can apply it on any time frame.
Yeah, of course.
The biggest thing is just like understanding that the way that ICT teaches things, like if he's teaching a whole lesson about New York session, there's certain intricacies, even you can see in YouTube and mentorship alike, that will just give you for each day. And some of them, the reason I was kind of turned off by some of the YouTube content when I first started was because that it was very rare that these things were happening in one pair. Like I would look at Euro USD and I would say, okay, I'm only going to trade New York OTE, and I'll be waiting for like 2 weeks just for that one setup, but once you start to realize that everything is kind of applicable and everything should be used together, then you can look at all the majors and look for New York OTE. And that's kind of something similar to what I do now. And it's just kind of funny how I've gone full circle from trying to make the most complex models to right back to like the YouTube basic stuff. But it's all just with the understanding. It's with the newfound understanding that it's less is more, pretty much. And that's just my philosophy.
Yeah. And it's funny that you said that, Bankaholic. Just to add to what you said, this whole idea that if you look at somebody who is profitable and they're getting really good entries, they're taking profits, and they're doing really well for themselves. And most persons will say that, all right, so I'm new, that's why I can't do this now. But after, I guess 1 year, 2 year, 3 years of whatever, I'll be able to get to that level. And that's not true, because
exactly,
the experience doesn't come with time. It's not like high school where you know that once you finish the first 6 grades, then you know everything. with trading, you can be trading for 6 years and you still don't know anything, simply because you didn't study properly. You want to learn, but you don't know how to learn. Absorbing material is not learning. Learning comes from understanding, and you only understand, like Enda says, by doing it. You have to practice a whole lot.
Yeah, so it's like anything, like it's like playing a sport, you know what I mean? Like if you want to play soccer or football, you can't just watch a few videos.
Watch YouTube, yeah.
Yeah, and then you're like, okay, I'll go out now and play for the play the Champions League or play for the NFL or play basketball in the NBA. Like you have to put hundreds and hundreds and like maybe thousands of hours in. Like what's the statistic? They say 10,000 hours and you're officially a master, something like that.
Yeah,
10,000.
10,000 hours of dedicated time to one subject. Do you know what I mean? To one practice. That's what makes you a professional. Like that's what makes you a master. It doesn't come from you. Okay, I'll do 2 hours study a week, and then in 3 weeks' time, I'm gonna make 100% on this account. It's like that's not gonna happen. Do you know what I mean? Like,
the funny thing is, if you use that sports analogy too, just one more thing, it's like in basketball, it's like you could shoot 10,000 shots and you can be the best shooter, but the best players don't shoot every shot. When they shoot when they're open, right?
Yeah.
So it's kind of like that with trading. It's like YouTube teaches you how to shoot, and like you can trade. Every order block, you can see every stop hunt, RTO, but you're not gonna shoot those shots when you got a 7-footer on you.
Yeah,
so
exactly.
The same thing. It's like everybody's trying to shoot those shots, but I think that's what mentorship kind of really refines with your mindset. Just I'm only gonna shoot the open shots, and then those are the ones I'm gonna make because I know all the concepts.
And then of course there's this thing as well of like the small people that are trying to get these 1 or 2 pips or half a pip stop loss, and they're they're posting all over YouTube 1 to 90 with risk to reward and Instagram, but like it comes down to it, if you think about it this way, like think about the analogy you just used, the 7-footer trying to block you, like that's you're trying to risk $1,000 or $2,000 from a funded account on a half a pip, like.
Yeah.
It's like that. That's like you're literally take out 2,000 and throw it in the fire. Like it's the quickest way to lose money.
You're shooting a game winner from half court. That's what it's like.
Yeah.
Like you're not gonna drop a 200 lot on a 1 pip stop loss. Like that just doesn't happen.
No. Not even if Art said it. Not even if Art said it, I would do it. Trading on a funding account is a different mindset altogether. That's what I think. I think persons pass challenges and then go, okay, I passed this challenge, I can do this. And then you blow your account.
In a week.
Or even less at times. Trading on a funding account is a different animal altogether. Because, there's no daily targets now. So you have to create your own targets.
Yeah.
You have to have your own rules. And I think the max drawdown rule still applies, so you have to understand that you can't go a month and you don't make any money, and then that's just a losing month, and that's fine. The next month, you build back and all that good stuff. But this idea that because there's more money in the account now, I'm going to make more profits, kills traders every time.
It's greed.
Yeah.
Greed and fear are the 2 things that kill every trader. That's the one thing I'll always say. Like it's so true. Like greed and fear, because you're either, like you said, hope isn't a strategy. Like when you're greedy, hope is something that drives your trading plan. Like you want to, I want to make 10,000 this month on this 100,000 funded account. So you're dropping 10 lots, dropping 20, dropping 30 lots. Trying to refine your stop loss as tight as possible so you get huge money off it and use bigger lot sizes. But like at the end of the day, the person dropping 5 lots with a 10 pip stop loss, risking 0.5%, and they're taking 30 pips every week, they're the people that are going to be more profitable in the long run than these guys that you see posting 50, 60 lot trades with 1 pip, 2 pip stop losses, and they're closing out 30% or 60% of their trade at 3 pips in profit. Like I find that's kind of like a hope.
Yeah, my psychology doesn't allow me to go over 20 lots. I'll start sweating I put
Once you
anything
have the,
greater than a 20 lot on, and I start sweating. So
No,
yeah,
it depends. It depends now. I've gone a bit over that now in the past, but
yeah. In the past, I've done it, and that's why I know that I'm not doing it right now.
I loaded I
40.
loaded
I
up.
remember that 40 lot on your USD.
That was, and I was like, this was the case with that trade. That trade was accidental, so to speak. It was 2%. It was 2% risk because I hadn't taken a trade in like 2 weeks, and I was like, okay, I'm allowing myself 2% exposure. I was like, I'm not gonna be too worried now if I lose 2%. That's okay by me. So I'm allowing myself. So I opened up the charts. I think I had like a 15 pip stop loss or something. I'm not sure. I think it was 20. So no, I don't even know. It was 10 pips or something. Yeah, 10 pips makes sense. Um, oh, I remember I literally set the limit, and then I was scalping on I think it was like a 500 euro account at the time. So I set the limit. I forgot I set the limit on the big account because I had set it on the smaller account as well. It was like a 0.25 on my small account because it was like, it was only like 500, $600 or euro. So I was like, okay, I'm just gonna take it, like risking like 3-4% on the small account, just kind of running it up that time. And I remember I was eating dinner and I took the phone out just to check on it, see if it hit triggered or anything, because I didn't even notice. Because it was FOMC, it was like late my time, it was like 7 p.m. And I was sitting there eating food, and I took my phone out and I was like, oh shit. I was like, the small account was like 130 euro profit. And I was like, oh yeah, nice. That's, whatever amount of percent. Like, I was like, that's sore. So I took some partials and then I like put the phone back down. And then I went, wait a minute. And I took it back out and I looked at the funded account and it was like 20%. I was like, oh fuck. So I was like, right, I could close that now. Like, just closed out. I closed at like 85 or 90%. Like, I took like 35 lots off or something. And then I think it eventually reversed, but I didn't care. I didn't trade for the rest of the month after that. That was madness. Like, but that was with FDMO as well. And the thing I was most scared of at the time, I remember someone said to me that like I didn't even realize until the trade was triggered in, the news rule. So I was so excited with the fact that the trade had triggered, and I didn't even realize. I was kind of like laughing to myself, and then I realized, oh fuck! I was like, maybe you have just lost this account because of that. And then I realized I'd go into the chart on the 1 minute chart. I was doing out the time it took from the news until it triggered in. There was like 5 or 6 minutes between it, so I was like, okay, we're safe.
Yeah. I tried to stay out of news altogether.
Yeah, but like that's the thing. Like I was a limit, so I didn't even realize. But I'm kind of like I was very lucky to escape, but I should have been more vigilant on that.
That's funny. I don't have any crazy stories like that, but I know what it's like to deal with big lot sizes.
The only other time that anything like that's ever happened was when I was living in Spain, and I put on like a 20 or it was a 30 lot buy on Euro USD, and I didn't go to sleep. I went out for food with the two guys I was living. They were my roommates, and I was out eating dinner, and then someone texted into the group chat. And I was like looking at it, and they're like, "Wow, Euro's at the rally," and I was like, "Oh no way!" And I opened the phone, and I was like, "Oh." And then I remember like I was drinking. I was like, okay, I put the phone away. I just moved stops to break even. I fell asleep then when I got home, and I woke up in the morning like 2 hours before New York, and it was like 50, 60 pips in profit, and I hadn't taken any partials. I was like, what the? It was super crazy stuff. Like,
and my respect goes to every trader that uses limits. I don't know. I don't think limits are for me, or I'm not yet there where I'm comfortable leaving limits. But I've been training using Bitcoin and limits, and I think it's better if I don't try to be too precise. If I just allow some room for error, so just allow myself to go in early and manage the risk. Just use a smaller lot. And I'm getting more comfortable with limits, but in the past I've had some really, really bad experiences with limits. And I mean, I didn't lose from any of them, but it's just that
Not
That
being
feeling
triggered.
like I missed out. I missed out because of precision. I was like, okay, you know what? Best thing to do is to
Like I'd
trade
honestly,
manually.
sorry, go ahead.
I was saying, I just trade manually. And once I take my partials and break even, and I close that phone, and you can do what you want.
Yeah, exactly. No, I feel that with limits, if you're being precise, you want to add on like a pip or two. It doesn't matter about the risk to reward. Like if you just drop the lot by 1 or 2 lots and add a pip or two on, like it's not going to harm you in the end, and then it means you actually get triggered in because there's nothing worse than lining up. Say you're going to take 2 trades in the week and you have them both like kind of like an idea where you want to see price go before you're going to start thinking about taking these. You get your change of state and then your entry misses by 1 pip bet. Like that's your whole week. Like your whole week plan, your whole weekend and the whole 2 or 3 days of the early week planning of these trades only to miss by, nothing. And then your psychology is like, chase the trade, chase the trade, chase the trade. And you're looking at the trade, you're looking for re-entries. And then like in the long run, that's only going to hurt you more. So I think adding on 2 or 3 pips and using like getting less risk to reward it's less. Like, I don't mind accommodating for that where it means you don't have to plan for so long and then miss the trade and be pissed at yourself. Like,
yeah, I think it's just about putting it into your model. That's kind of what I found. Like I sent Sakish my most recent updates, and I finally put in like all the entry, like how big I want my stop loss to be, in like the lower time frame entry patterns specifically. Just like what do you want to see once the price hits that higher time frame level, because if you shouldn't really be missing your entry if everything in your model happened. And that's just the biggest thing that I think I've learned too, or one of the biggest things. But yeah.
Definitely. I mean, but I guess every trader goes through a journey, in the sense that only you see your losses and your wins. Well, unless you're posting everywhere. When you see your trades, there's always a pattern. There's always a pattern to your trades. It's either you're going to be trading the same session, so that's your pattern. You only trade in New York, or you only trade a particular entry pattern. So again, that's your pattern. Or you find that every time you lose a trade, it's because you trade on a particular day of the week. So like for me now, I hate Thursdays. Full stop. Hate Thursdays. My chances of losing on Thursday just jump by about 30%. That's what I think. So if you ever see me trading on a Thursday, I'm likely to be using a smaller lot size. I don't know. I'm yet to figure out what happens on Thursdays that just throws my bias off. I think there's usually like a reversal pattern or an extended move on Thursday tends to continue.
Think about it in terms. This is kind of one way I framed the week for myself was picture a fractal. So picture you have London Open, say London Open, New York Open, London close. Right, that's 1 day of trading. The way I see it in like a weekly format on a higher, say you expand this fractal from 1 day to 1 week. The way I'm seeing it is Monday into like Tuesday is kind of like the London Open, and then Wednesday and kind of like late on Tuesday, Wednesday is like New York session, and then the Thursday is going to be London close reversal into Friday. Like not always now, but that's kind of like the one way I think about it in terms of fractals. Like
that makes sense
because you could do it with the same thing with a month, like month's 30 days, first 10 days London, second 10 days New York, etc., etc. But like now, obviously now you're gonna have different templates to account for and stuff like deeper into thinking. But that's just like a thought that I had. Like there's no empirical evidence behind that now. It's just, you know what I mean? It's kind of one way. Like I always find that Thursday is one of my best days.
Yeah, that's the thing. And almost every trader I know has great results on Thursdays.
Yeah, like why do you
I know people who only trade Thursdays.
No, I figured something out. I think with my recent case study, but I don't think we're allowed to disclose that.
Yeah, maybe wouldn't be the best idea.
Yeah, but no, it's all about selection. I think at the end of the day, if I were to leave anybody with last words of advice from somebody just barely making it through. But I think, in all seriousness, that like the biggest thing I've learned is just the selection process. And it's like if you can put yourself, like if you can just imagine a model that you have where you can trade exactly how you trade now, but all the best markets and best days are handpicked for you. I think everybody would do pretty well.
Yeah,
and that's fair to say because like just the ICT YouTube market maker models is like a big thing. And that's something I would really focus on. But once you see the how and when those occur on a day-to-day basis throughout a basket of markets that you have picked, I think that's probably the closest you can get to having something that you can do, quote unquote, every day or whatever your time frame is. Something you can do consistently and just feel comfortable with that. Like your rules are there. If it doesn't work out, it just means you were wrong. And there's not really that the variability in your results that I've kind of experienced a lot. And I'm sure you guys have too.
Sure, for sure.
Yeah.
I mean, like one kind of last thing I want to touch on is if you were to go back to the very, very start and start all over again, what would you say to yourself?
Drop the indicators and practice more.
Drop indicators.
That's my advice. Yeah. Drop the indicators. Just practice more. Practice more and journal.
Journal is very important.
Yeah. I think if I started my trading on the note that, all right, I'm only going to be trading in this set window of time, I'd have way more consistency way earlier. I'd notice patterns in that time. I'd notice what days setups didn't form. I'd notice, what months of the year, if you journal properly, what months of the year, didn't give me the best trades. And then using that, I could plan around it. If I know that, like everybody knows that summer is not a good time to trade, right? But then you have the summer doldrum. But then you have other persons who want that close, and then they're forcing trades. Trades. But
for sure,
as a professional, as you get better, you'll realize that these things you'll still find small setups, but then probability based, it's not worth the risk. So drop the lots. Not every trade has to be 1%. And that's what being funded teaches you. You don't need to make a killing every day. Let the numbers work.
Mm-hmm. Yeah, I think one thing. Oh, sorry. You want to go?
I was just saying, that's like one of the main things for people getting funded, like $100,000, 10% a month, just 2%, 2.5% a week, change your life.
Easy.
You know what I mean? So don't be focused on trying to get big numbers every day, just a little bit, tip away, a little bit every week.
Yeah.
Sorry, I didn't mean cut you off there.
You don't need to use the biggest lots. No full margin.
Yeah, I sound repetitive too, but if I were to go back and tell myself something, I think it's just the biggest thing that Sakish has taught me as well has just been like having rules and just applying them on a daily basis, refining them, but just like demanding what you want to see, because that's kind of the only way you can replicate like the cyclical occurrences of each day's delivery. And if you don't have rules, then you kind of you're just guessing. You're just trying to go off of like subconscious patterns. Yeah, that's the biggest thing. It's just finding these rules. ICT can give you those rules through YouTube, but it's just the culmination of them and the application of them in the correct manner.
Yeah, like I think anyone doesn't have their rules written down on a piece of paper or a whiteboard, put a whiteboard behind where you sit down to trade, or put a piece of paper blue tacked to it or thumb tacked to the wall, or even just sitting on the desk beside you where you trade. That's just to have your rules there.
And your rules shouldn't be vague, and it shouldn't be copied. It should be something that's specific to you. You're going to trade order blocks? Okay, what order blocks are you going to trade? where should these order blocks form? You know, what time of the day are you looking for order blocks? Rules have to be specific like that. That's the only way you can track your progress.
Yeah, that's very true.
Yeah, absolutely. So, Bankaholic, do you post all your breakdowns still in your channel?
Yeah. I could put the channel link, or you could put it in the description if you want.
I'll put the channel link in the description. And you have YouTube as well. We'll link the YouTube in the description as well.
Yeah, it's just Bankaholic on YouTube. I have a lot of scalping videos, just kind of displaying like the skill set like I was talking about. And what I'm gonna start doing now is just showing the application under the filters that I've been working on for the past couple months.
Sweet.
Nice.
And it's all like live executions, isn't it?
Yeah. It is. Yeah, like I said, it's just like kind of showing what everybody else could do, just order blocks, figuring out entry patterns. But I think the biggest, like, it's a misconception as well, I feel like, on my YouTube right now. And that's kind of why I've been quiet on my Telegram. I've just been preparing this fully complete model. And I think my YouTube's a good representation of like the entry rules to that. And all the links can be in the description. And I appreciate you guys having me.
Yeah, appreciate it, man.
Thanks for joining us.
Our pleasure. Thanks for joining us, man. Appreciate it. All right, everybody, we'll leave the links to all the channels and stuff in the description of this video. Thanks for listening.
All right.
Any last words, boys?
Any last words of advice? Don't give up.
Don't give up. Study more.
No. Yeah. Study more.
Smile and journal. Smile and wave. That's my word.
Smile and wave. Absolutely. Right. Well, we'll see you next week. We'll upload more information into the channels over the week about the next guest and so on and so forth.
Sure.
Right. Thanks everybody for listening, and thanks Bankaholic again for joining us.
Yeah, no worries.
Appreciate it, man.
Have a good trading week.
You too, bro.
Same to you, bro.
All right.